I think the consumer was telling us that she's in very good shape during the holiday season. If we were looking at 3% growth 2 years ago, 4% last year, and 5% this year, it's a healthy consumer shopping a lot online with that 19% growth. But stores are still performing pretty well. They were up 3% and still represent north of, let's call it 87% of shopping is still done in stores.
Right. So, Steve, explain to us why the stock market is having a meltdown, the consumer being 2/3 of the economy and giving you these strong signals.
Well, clearly the stock market has a lot of other issues, anticipating some tougher times probably in 2019. Time will tell whether or not it's correct. I can only look at what's actually happening with the consumer, and the consumer's doing quite well. And you're seeing it across a wide range of categories. I saw some blowout performance in areas like home improvement and hardware and apparel. So I'm not sure whether the stock market's right or wrong on this. I'm not a prognosticator on it. But clearly what's happening in the marketplace today, and this is across all sectors of the, whether it's the lower end and even the higher end performing in a tough stock market.
Steve, is it because of the strength? So if retailers are now dealing with higher minimum wages because of legislation, or just higher wages broadly speaking because of the strength, they have shortages of workers. We know they're hiring unprecedented numbers to staff out this holiday season. So could it be that the stocks are suffering, and maybe this is a tell for the broader market, because their costs are going up, commensurate with the increase in foot traffic and sales?
Well, clearly you're starting to see some margin pressure on the retailers. Labor cost inputs are rising. You've got the issue of what's going to happen with the tariffs. So the general inflation is at play. So clearly these are issues that the retailers are facing going into next year. And whether or not they have pricing power is going to be an important factor as to what happens to overall margins.
Steve, what do you make of the fall in gas prices? Is that a significant boost for the consumer next year?
I think for next year, I don't think it had an effect on the 2018 performance. I do think it's an effective bit of a tax decrease in a sense, or a tax cut going into 2019. So I think two of the positives are going to be the gas rates are going to affect positively the consumer. I also think the tax refunds are going to be bigger than people think. I don't believe that people took the reductions in their withholding with the tax cut, so they're going to get a little bit more in their pocket coming out of the tax cut as well.
What about the fall in the stock market? Is that something that's going to spook consumers at certain price points or just generally?
I think that the stock market performance largely affects the luxury sector more than the broad-based consumer. The higher-end consumer is the one that holds most of the stocks. There's been when I ran Sachs, there was a very high correlation between stock market performance and the performance of the business. I would anticipate that you would see a slowdown in the luxury sector. If I looked at the numbers for the holiday season, luxury was flattish versus where it had been growing a bit. So it wouldn't surprise me to see luxury get hit a little. But if I look at the broader-based consumer market, I don't believe that it's as much driven by the stock market.
Steve, give us one example of an emerging retailer you think will do well in this environment.
Look, I think it's going to be the retailers that really do well in the omni-channel performance. It's the Walmart, the Targets, the buy online, pick up in store. It's the analytics to understand what the consumer needs and when they need it. And it's the companies that made the investments in that kind of capabilities that are going to be winning. So I would look for the major players like those two, others to continue to perform well. And then you're going to have the differentiated, unique, the Warby Parkers of the world, the Untuckits, the little internet companies that are now expanding into stores. I would expect them to perform well in this emerging market because it's all about online and in the stores and having both capabilities.